market's raging, and the traders all shout. There's one man we're watching, his moves full of clout. Some call him evil, some call him foul, but I just smile and call him Daddy Powell. Will Jerome Powell nuke the market again? With a flick of his wrist, make fortunes disappear in the wind. Wall Street's a jungle, lions on the prowl, but the king of the jungle is old Daddy Powell. Oh Daddy Powell, oh Daddy Powell, every single time. It's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh Daddy Powell, don't bring me down. The numbers are flying, red ink and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavow, all bending the knee to mighty Daddy Powell. Oh Daddy Powell, oh Daddy Powell, every single time. It's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh Daddy Powell, don't bring me down. The bulls and the bears are locked in a fight. Who knows if we'll feast or starve come the night? With a glance at the screen, I let out a howl when I see that old motherfucker, old Daddy Powell.
Brother. Well, my fellow degenerates, here we are. I have to admit, that song was much more relaxed and soothing than I currently am. Maybe on the surface, I seem like a calm, cool, collected guy, but internally, spiritually, within my account, I'm freaking out. I hate trading on these days. I don't know why I'm in a position. I'm down big right now. I'm down big, right? I'm not having a good one there, Tonto. That's probably the best way I could really put it, is I'm having a rough go of it, and I need Daddy Pal to save me. I very, very much need Daddy Pal to come down and grace my position, because holy shit, I'm down a lot of money. I don't know, dude. I just don't know. So we're going to get the results in about 12 minutes. That's when the FOMC, the Federal Open Market Committee, is going to be releasing their statement and their decision where they tell us we're not changing the Fed fund rate. Market's going to have a crazy reaction. Then 30 minutes later at 2:30, that's when we are going to be getting the actual speech from Jerome Powell. That's the plan. Now, between now and the 2 p.m. result, there are some things I need to talk about. So first of all, SPY Probably all of you, the fact that you're watching this, you know the market had some weird vomit at 1 p.m. Why did the market vomit? Because of Trump. So just past 1 p.m., NVIDIA shares extended the losses after a report Trump officials discussing tightening curbs on the company's sales to China. So this discussion, reinvigoration, basically saying, hey, yeah, stop selling to China. So that was obviously bad. And that's exactly why the market, the SPY, the Qs, NVIDIA, that's why the semiconductors got hit. Then we started to bounce because of Kramer. There is no silver lining right now with NVIDIA, though. So that was right after, and obviously that's exactly why we started bouncing, because Kramer said that there's no silver lining. Obviously, I'm just joking a little bit. It's more so because of this. NVIDIA says it is ready to work with the U.S. administration as it pursues its own approach to AI. So a little bit more helpful there in terms of this rhetoric. It's easing off that initial reaction. But I mean, don't get me wrong. Overall, it's still pretty bad. I mean, look at this vomit. And yeah, we bounced back, but we bounced back to the intraday low before that happened. The Qs bounced back too. But once again, we're pretty much at the intraday low before this all happened. So it's not as extremely bad as it was, but it's still overall bad. So to help us all out, you guys know that I have a lot of bullish positions on right now, and I'm just praying that it works. So I did whip up a quick prayer, a quick poem, a quick sentiment that I hope Jerome Powell reads. Oh, Daddy Powell, hear our plea. Let markets rise, let stocks run free. A dovish word, a gentle nod, and bulls will dance where bears have throd. Lower rates or keep them steady. Traders wait, their bids are ready. Print some cash or ease the strain. Just don't let us feel the pain. So ring the bell, let spirits soar, pump it up. We beg for more. I'm doing what I can, folks. At this point, it's no longer Lady Luck. It's no longer my quality trades because they have been non-existent for weeks now. I'm at the point of fucking, dude, I'm about to get a Jerome Powell haiku on my back if it's what we need to go. I'm running out of options here. I'm running out of options. I am emotionally distressed, if you will. I am beyond emotionally distressed. So this is what's going on. I mean, I have 10 minutes to make up a decision, to do something. I mean, Mag 7 getting nailed all day, a little bit of a bounce from 12 to 12:30, then it was fine, and then right at 1, which is where we got that announcement from NVIDIA and Trump. That was the vomit. Tried to bounce back, got hit again, looking pretty precarious right now. If you take a look at the S&P 500, looking a bit better. We are picking up to almost a new Delta high reading on the day, at least for all expiration. So that's maybe something to hang our hats on. I don't know. The S&P is picking up. We basically have people buying calls off of that bounce. They waited for that, and then they started to punt into calls. Some puts getting closed out as well, but the people who were very shrewd and reacted very quickly bought that dip around 105, and they're already like sitting pretty. And then obviously if this report goes the way that they want it to, they're going to be even better off. So if you happen to be one of those traders who bought that dip, first of all, congrats to you. Second of all, you have an absolute set of diamond balls on you for doing that one. So if that happens to be you, absolutely, you deserve it. You absolutely deserve it. So here we are. NVIDIA's not doing anything. Bitcoin's picking over $1,000 actually. SPY, ever since this vomit, we like quickly bounced back up. The Qs quickly bounced back up. But since then, since 110, we've just been kind of range bound. Here's a look at the flow once again, just to get a screenshot of all of this before it gets going. So we're picking up nicely. Mag 7 is still pretty sketchy. If you want to see the NASDAQ itself, or not the NASDAQ, just the QQQ, huge vomit until about 130. Bouncing up, taking a bit of a breather right now, but overall pretty messy. I think it's hard to discern anything from that. So that's where we're at. I'm definitely going to forget to do this later. So let me just, if you want to join up with the Goonie Trading Discord, it is free for the first month if you use this promo code Goonie, pinned to the top of chat in the description of the video. I just want to throw that out there if you want to trade with other people who, I don't know, I'm getting my ass kicked today, so maybe you shouldn't join. Maybe you should just go find a better one. I don't know what to tell you. This is just, I don't even know why I get out of bed on these days. Like, yeah, sometimes I make money, sometimes I lose money. But then it just comes back to the question of like, is the stress actually worth it? And the answer there is probably a big fat no, but here we are. So I guess we just gotta, I don't know. You know what we could do? You know what we could do to potentially figure this one out? We could break out a Cats Rule the Earth tarot card. We could, maybe the market gods will be giving us a message. We do have a little bit of time. Here we go. Here we go. Here we go. I'm going to give it a quick shuffle so you guys know I'm not cheating. A little quick shuffle. We gotta get the market gods in here with us today. We gotta get the market gods in with us today. Shuffle, shuffle, shuffle. No cheating. All right. We are going to stop in 3, 2, 1. All right. We're going to take this card and we're going to see what it is. Oh, man. Please be good. Please be good. Please be good. We got a very handsome cat. A page of swords. A page of swords. Is that good? Is that bad? Is that in the middle? Where are we? Where are we? A page of swords. Page of swords. Children are born explorers. They seek to make sense of the world and question what they see. This is the curious nature embodied in the page. This card may represent an actual person or indicate a desire to study, learn, or to take off in a new direction. Messages bring surprising news or secrets may be uncovered. Holy fuck. What does that mean, people? Or take off. This card may represent an actual person or indicate a desire to study, learn, or take off in a new direction. Fuck. What does that mean? All right. I thought that was going to give us... I thought that was going to be a little bit more decisive here, folks. I mean, are they talking about what? Are we talking about a new direction relative to intraday because we've been down and we're going to take off? Or is it talking about the daily chart where we've actually been going up and we're about to now go down? What time? Why do these tarot cards not have associated time frames? The amount of times I've called Hasbro to try to fix this problem is astounding. It's to the point that I'm banned from calling them. Like something about just like they're just getting angry, just getting absolutely angry at me. Oh man, takeoff equals take off equals. It didn't say take off. It says go. Did it say take off into a new direction? Oh brother. Oh, this one. I think I my stress was already at 100 and now it's somehow at 101. We're somehow at a whole additional level of stress. Woo! FOMC always spikes up and then crash. That is 100% inaccurate. That is not something that always happens. You might think that happens, but obviously you saw that happen one time and you're now extrapolating that out to every other FOMC meeting. That's just truly not accurate by any manner. So as you can tell, I'm emotionally on the edge. So if you can try to stop yourself from saying stupid fucking things, I would really appreciate that. I'm much more receptive to people saying stupid things when I'm making money, when I'm up money, when I'm sitting in a good position. My emotional capacity to handle dumb things is literally non-existent when I'm down as bad as I am down at this moment in time. So if we could all, keep each other accountable and maybe fact check it with a friend before you say something that dumb. Maybe you like bounce it off, be like, hey, is this a dumb statement or not? I need you to really, I need you guys to be better. I can't, this is not, it's going to be a rough one. It's going to be a rough one. All right. You could vote right now on YouTube if you think it's going to be bullish or bearish. I want to see a mayonnaise as an instrument. That's actually pretty funny. Please vote. We are 2.5 minutes out from finding out how absurdly fucked I am or not. I don't know. How much to the Federal Reserve? Okay, fuck you, buddy. I'm sacrificing you. How much to the Federal Reserve? How do I... Boom! We just made a sacrifice. That's it. That's what we needed. We needed a sacrificial lamb to the market gods a mere minute out. We got one. We found out that mayonnaise is in fact an instrument, and we sacrificed someone to the market gods. All right. Right now, 63% of you came in as bullish on the situation. 63% of you. So you guys are more bullish than not, but we're going to find out. Now, please remember, Jerome Powell speaks at 2:30, but we get the results at 2. Please understand, I've done everything in my power to try to get this market to pop. I want to be very, 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 very clear about that. I've done everything. I pulled tarot cards. I sacrificed someone. I put on a lucky shirt. I've done everything in my capacity to get this market to go up. I'm please asking you to do the same thing. The only other possible thing I could do right now, is one gigantic magnet to pull price up. I ask all of you in the next 30 seconds of your life, please join me in putting a giant, the more magnets, the better. So please take a moment out of your time. Let's pull the price. Let's just pull the price up. Let's inflict our will upon price action. If not enough of you do it, it might not work, but I'm honestly at the point of pulling out all of the stops. All of the stops. All right. Anything? Did they not release it? Hello? Down? It was oddly had not much of a reaction. Did it not come out or something? This thing barely moved. All right. What is going on? Did they have a hiccup or something?
Crossed out a line this time saying that inflation has made progress towards the 2% objective. Not 100% sure what that means. Perhaps we'll ask Powell about that. Is that hawkish? Or
a muted reaction thus far. A very muted reaction.
Solid. They had said that they had ease, so they did an upgrade of the condition of the labor market, also noting that the unemployment rate has stabilized at a low level. The economy, as they said last time, is expanding at a solid pace. The committee is
way less of a reaction than I thought we would have.
Mandate. The committee is, the statement says the committee is still considering the extent and timing of additional adjustments. No hint as to when that might happen.
Very interesting. We sold right to support. There's a big put credit spread right at the level that we're at, maybe potentially bouncing off of this.
Adjust policy as appropriate if risks emerge. And we have a unanimous decision with new voters for the new year. January 2025 is when they turn over. We have Schmidt from Kansas City, Collins from Boston, Musalem from Kansas City, and Goolsby from Chicago. So a bit of a Midwest contingent voting this time, sans Minneapolis. So
options initially dropped.
Stage statement, not much
maybe
going on. And
popping a little bit now. How much is this follow through going to be?
And send it over to you.
Literally,
well, wait a minute, Steve. You can't just drop
baby
it like,
sell off to
like
support.
It's hot, because I'm just going to tell you, Steve, what you just said. I'm going to quote Steve Leisman and Steve Leisman. Labor markets are solid. Inflation may get better. Considering additional timing of moves. This sounds like a Steve Leisman
confident view on
Fed
inflation
ahead of a rate hike, not a rate cut.
You know, I guess so. I mean, I don't think that they're there at that point yet, Brian, I think the idea that the labor market remains solid is
actually catching a bid here
is a positive that
very
Powell
strange
and the Fed
reaction.
have that allow
Like,
them to
I should say lack
figure
of
out which
reaction.
way they want to go with rates. But I still think there's an inference in the statement when they say, in considering the extent and timing of additional adjustments. And by the way, Brian, you do add the important point here, which is that one of the keys that I've been saying to this meeting is, does Powell affirm that with all the other things that are going on that y'all were talking about in the last segment, tariffs and tax policy and all the other
Here's
stuff,
a live look at the options flow. Sold off, bounced, now flat.
Is still downward. That's really important. Is he still confident that inflation is moving towards the 2% target? Those are the two monetary policy keys as I see them to the press conference that's coming up.
Quickly, Steve, usually the big mover when we get the statement is also the projections, the dots as I won't call them. But we did not get those this meeting,
no
right?
SCP
Which makes this a little
around.
bit, less for the market to kind of sink its teeth into.
Right, no dots. The dots come.
We're almost right back to where this started.
I have no problem saying dots if they want to fire me. For
The Nasdaq
dots.
did bounce back.
By the way, this is a little inside baseball where we had an old boss who didn't like us to say the word dots. I don't actually know what the new policy is, but in any event, they come 4 times a year. There is one question, Kelly, we might ask the chair, which is he did answer it one time, and we said, hey, if you were to do the dots now, are the old dots still good? That might be an interesting question, though. I don't know that enough has changed now to ask him that question in terms of
now
would say,
the
well,
reaction is
I
at
think
this point the fact that
cuts
the
are
initial
still
reaction was so
something that
muted
the
is going to
Fed
put
would
so
more
much
or
more of
less
an
back.
emphasis on
Remember,
what
it was
Jerome
close
Powell
call
says
after
today.
Yeah, no, actually
Much
that would
more
be a
of an
good question.
emphasis.
Would anything maybe change those projections? Steve, thanks.
Options
Let's turn back
dipping
to the
a
panel
little
for more
bit
thoughts
here.
and maybe we'll go in reverse order. So,
With
Jim,
price.
the 10-year, it's up like a couple of basis points. Not a huge mover so far. What jumps out to you?
So look, effectively, there's a long period of time between the next meetings. So the next Fed meeting is March 19th. We get a couple of labor reports. We get a couple of inflation data points. We have a new president, new policies that are coming through. I think the Fed is right to be pause and be as really.
We knew they were
going
to pause. No one should be surprised about that.
So what's really jumping out to me, effectively, is how the Fed is thinking about the labor market. I think the inflation.
We are coming up
is
to the
pretty
low
well
of the initial
entrenched. It
reaction.
seems like it's
45
relatively
seconds
low and
in.
stable, and that's what I expect. But it's really the labor market. It's all of the adjustments that we get. We get these QCEW adjustments.
Double bounce?
That always adjust things down.
Double
so the
bottom?
labor market may not be as strong as the headline numbers suggest. And I think that's really the worry point for the Fed, is that they're just not 100% certain on how strong the labor market actually is or is not, and that's going to make them react to hiking, or not hiking, but cutting more so than anything else. I don't think a hike is in the equation for this year.
Fair enough, Jim. And Dave, I was kind of making
Mag
a point
7
because the
bleeding off a
commentary,
little bit here.
David, has been so positive. It's kind of weird that we're talking about rate cuts, and the Fed has already cut rates when a lot of the rhetoric around it is actually fairly good. That said, and I don't want to drag politics kicking and screaming into this. We try to avoid that. There's plenty of other channels that do it. But I think Steve's point was well taken, David, which is that if we don't know what the policies are ultimately going to be around inflation and jobs and immigration, whatever, isn't it much harder for the Fed to do their job because they kind of got to wait and see what some of these policies are?
Well, that's right. And if you sort of go back 6 months ago, 6 months ago, you could have said the unemployment rate's going up, but maybe it's not a problem. Inflation's coming down, but and maybe it's going to head towards 2%. Now we sort of settled into really very close to an equilibrium, but it's a hot equilibrium. We've got
The
inflation
market
a little
doesn't
bit
know
above
how to
2%.
interpret
We've got an
this.
unemployment rate pretty low here, and then all the risk in terms of what do we do in tariffs, what do we do in immigration, what do we do in fiscal stimulus,
dropped,
all of it
popped,
has a
flat,
potential
little bit of a
for
hit.
lifting inflation. So from the Fed's
And now
perspective,
we're
they
just
really
flat
don't
again.
want to cut here. And I think
We're
the
not
message
trending
is,
in any way,
look,
really.
please don't expect a cut anytime soon from us here, because the last thing they want to do is have to hike rates or try to hike rates later on in the year if they feel like they've overdone it. So I think they'd really like to wait a while here before making their next move.
Stephanie,
hey, Brian,
go ahead. Yes, go ahead.
I just wanted to add something very quickly to that, which is that I think the Trump administration is going to suffer a little bit from the lessons learned in the Biden administration. I think if you ask your average Fed official, they'd say, maybe we should have responded a little more forcefully and changed course perhaps a little more quickly when it came to the stimulus from the Biden administration. So I think they'll be a little bit more on their toes about fiscal policy.
We're picking up a tiny
Some of
bit
the
in
Trump
options,
administration may see
a little
that
bit
as
of
being
enthusiasm.
hypocritical or whoever. But the Fed
People
is really
are
good at fighting the
closing
last
out their
war, and that's one
puts
of the
is what's
wars they'll be
happening
fighting,
in
I
real
think,
time.
which is this idea that
A little
we
bit
need
of
to be on our
zero
toes when
DT
fiscal
puts.
policy
They're locking
changes.
in some
So
gains.
true. And I was just, Stephanie, I don't know if the next
Mag
question will be
7 is still
relevant to
looking
that or not,
pretty
but I was
weak.
going to say, what for you is the most important data? I mean, is it still jobs report? Is it inflation, consumer confidence? Or is it just, like, to Steve's point, what comes out of the White House?
Yeah, I mean, of course, what comes out of the White House is going to be quite important. Granted, we might not get information on that right now, which is why the Fed can't really react, and it makes sense for them to not do all that much. From a data perspective, employment cost index this week is going to be very important to gauge to what extent the labor markets are inflationary or not. Our base case is they're not that inflationary right now. But we are worried about the pace of immigration really starting to tighten the labor market. And I think this is not really widely discussed enough. If we really start to see 3.6 million visas roll off over the next 2 years, that's likely to tighten the labor market pretty substantially. And it's going to make the job for the Fed quite difficult.
Yeah, and I think, Jim, listen, ultimately we can get into these theoretical discussions because we don't know what's going to happen. But I do know this, is that a lot of...
Very quickly right now, the fixed income market is cutting in the first rate cut to be in June of this year. June is now the estimated rate cut. Traders price in less Fed easing this year after FOMC statement. Yeah, because they're a little bit worried about inflation. Balance sheet runoff to continue at previous pace. Fed is attentive to the risks of both sides of the dual mandate. Vote is in favor of policy was unanimous. Traders expect, June, we knew that. We're down a little bit. Fed removes reference to inflation, making progress toward goal. Unemployment rate has stabilized at a low level. Inflation remains somewhat elevated. So this slight bearish reaction, which was far less than even just the market's reaction to Trump's commentary on NVIDIA today, is because of this one line. Inflation remains somewhat elevated. So that concern about inflation, and actually now we're getting
some of the activity, business
reaction.
activity, more to the mid-cap sector. So we still like the equity markets. We still think equities are a good investment. But we think it's true in the broader markets, more in the mid-cap sectors, where some of the deregulation and fiscal growth policies might have the biggest impact. On bonds, we're relatively neutral. We don't think there's going to be a recession, so we think default risks stay relatively low.
Options flow
we think
pretty
you're going to
flat.
get the coupon in bonds, but I don't think much more than that. So essentially, it's really a balanced portfolio. But if you ask me, I'm a little bit more optimistic on the outcomes here, and I want to entertain the possibility of an upside. So I'm a little bit more positive on the equity side. However, it's more in the broader markets, cyclicals, materials, industrials, things of that nature. The mid-cap sector is more so than just large-cap tech.
Statement on progress to 2% inflation was removed.
I mean, maybe ever. But David, I was going to turn to you also as a wearing your strategist hat. What are the real-world investing implications?
Well, I think it's not about the economy. It really isn't. The economy is fine in terms of growth and jobs and profits and inflation. The real issue is that we've got some bubbly valuations here.
Price going down for 30
markets
minutes.
Which are very concentrated. We've got portfolios which have drifted to be very
Options
concentrated.
do not agree, though, with this drop.
Which is
Options
much
are
riskier
pretty
than
flat.
it was 5 years ago.
I guess everyone's just waiting for Jerome Powell.
For some of these administration policies to disrupt things. So I think people should really just don't look at the economy. Look at how you're positioned. Are you
Bitcoin
basically in too risky a portfolio? All said for the world of uncertainty that we have right now.
Unchanged.
I like risk.
Hey guys,
It's the only way to make money. Go ahead, Steve.
Far be it for me to steal Rick's thunder. I don't know if you have Rick coming up, but it looks like yields are a touch higher. And I'll give Brian the bingo award there, seeing this as a little bit hawkish. I think that's the way the bond market, I'm trying to get a beat on the probabilities. It still looks like there's an odds-on probability of that second cut in December, which is the thing that's been up and down, but just something worth watching. I got about 5 bips on the 10 and maybe 4 or 5 on the 2-year as well. So it does look like the market is digesting. This is just a bit hawkish.
Yeah, it's because the statement, Steve, they removed the cooling of labor and the lack of improvement on inflation. So.
Right, exactly.
Yeah, they sort of see those ticks moving, I guess, against them.
S&P 500 options now getting hit.
Let's leave it there for right now. Let's get out to Rick for some more reaction in the bond market. We appreciate it. Steve,
options
Stephanie,
starting to dump
Jim
now.
Kieran, David, Kelly
it
as well. Rick, you see this
call
kind of back
selling
up in rates.
and put buying.
When we say
on
hawkish,
the
it's so interesting to sit here at 2:11 Eastern,
to this fresh
and a
low.
5 basis point back up in rates can easily become a bloodbath, or we can just end up shaking it off in a couple of hours. Which way do you think this one goes?
Well, I think I would consider it much more serious. And it's not how many basis points that we're going up. In my opinion, it's where we have been holding. We've been holding 4.5%. We've been holding 4 3/4 in a 30-year. And there's a lot more going on under the hood. Let's look at an intraday of twos. Okay, you can see what it's doing. Rates are moving up.
Jerome Powell will be speaking in 15 minutes.
What this
Here's our boy
did
Rick,
was,
though.
this put today's yields above yesterday's high yield. There's twos. Now look at 10s. Same dynamic. Look at a 1-day, look at a 2-day. Look at 30s. Look at a 1-day, look at a 2-day. This is significant. The dollar index, as you see, had already traded above its previous day's highs. You know, what we are going through right now is, and I'm not sure what I like better when I reference it. Are we in uncertainty pricing or are we in disruptive pricing? Take your choice. And in either case, CNBC loves disruption. We have disruptor conferences. But it seems as though this administration, disrupting is a negative thing. It's viewed as negative. And when you look at the notion that everybody seems to bring forth is that all you need to do is change our target from 2% to 2.5% or 2 3/4 or 3%. It doesn't make a difference. I couldn't agree with any statements more than that. With the debt and deficit issues we have, with the disruptive pricing that we have, should they move the goalposts, you know what's going to happen, in my opinion? The market will penalize them via much higher interest rates. It's a bad idea. Yeah. And we could talk about it and talk about it, but in the end, if they actually do it or a senior Fed official actually voices it, my word would be buckle up.
Buckle up,
the market's
Buttercup.
already moving, and yields are indeed moving up. They are moving higher. I think it was Alan Greenspan, Rick, that said, if you understand what I said, I must have misspoke. Rick, thank you very much. All right, Bob Pisani, I hope our Fed panel is gone because I'm going to say something really just inappropriate here. Just if you're listening on the radio, turn the volume down. You don't want to hear this.
All right, we're starting to pick up, starting to show some life right now.
Right now, like the Fed, we know they're kind of on hold.
Call buying is coming in.
Nvidia's down what?
Call
5-6%?
buying.
There's a lot
and
of fears
put
around
selling.
Stuff, so we're not
It's
only
just
watching
starting
the Fed,
right
and I think
now.
the press conference is very important.
Calls are being bought.
But there's
puts
a
are
lot
being
of other
sold.
stuff happening under the hood that has nothing to do with the Fed that I think is equally,
It's
if
actually
not more so
picking up
right now.
kind of to a noteworthy
Including
degree.
the big rotation we're seeing today. I mean, before this, there was more stocks up than down, and I agree. There's
Mag
obviously
7
some money coming
remaining
out of
kind of
Nvidia.
unchanged.
I just want to
but
point out that
options
up
getting a
until
bit more
or so
bullish.
ago,
Let's see if there's any follow through.
The stock end of this was very, very modest because I agree with Steve's point. The fact that they left out this
call buying is coming in right at that intraday low.
2% objective does strike me as somewhat on the hawkish side. And remember,
Bitcoin even bouncing
what you
back.
want here, and I think
Nvidia's
David said this
flat.
earlier, you want the meeting to be boring. And boring would be Powell insisting that they are moving towards the 2% objective. And any suggestion that there's not going to be any rate cuts, 1 or 2,
Come on, options.
or that there might even be a
we
rate
need
hike,
some buyers.
that's certainly
if you happen
not
to be a
in the
billionaire
market. So
watching,
there's
just
your
splash
big
the
risk
pot.
right now. The other risk, of course, is Powell could get dragged into some long discussion about tariffs and what I call the swamp of tariffs with Powell. And that might introduce, of course, the probability or the possibility of some kind of accidental volatility, as I like to call it. So there's your two risks right now. Other than that, the handoff for February from the stock perspective is terrific. We have 3% GDP growth. We've got, 20% of the earnings coming in? They're all better than expected. Very high levels of beats that are out there. We are seeing a terrific rotation in January. Cyclical stocks like industrial and materials are outperforming. Healthcare is outperforming. Even energy and financials are outperforming. Tech is underperforming. There it is. How many years have we been waiting for this story and it hasn't happened for more than a few days? Now we're on the verge of an entire month with the S&P up 2.5%, led by cyclicals
Catching a bid again.
And defensive stocks. That's about as good as it gets. And finally, I just want to point out, January's positive. What are we up 2.5% so far, Brian, on the month? So, the old saying, as goes January, so goes the year. There we are, 2.5%. So Powell's going to get asked a lot about the fact that he left out this sentence, and there's where it's going to get very, very
market
now
showing some weakness.
I think the September rate cut, the big half-point cut that kind of was a howitzer it's a World War II artillery reference. The howitzer, I think, I hope will get more questions. Bob Pisani, thank you very much. Well, folks, we are just
bearish
moments
reaction
away from
thus
that press
far, but
conference.
a
Well, maybe
small
we'll get
bearish
questions on
reaction.
all of this.
This is
right?
actually one of the most
What happened to
muted
that
reactions
reference to
we've seen
inflation?
from an FOMC
Was the rate cut in September
rate decision
really
in a minute.
necessary? Why is the bond market moving
Bearish
this
because
way?
of the inflation.
Why am I asking so
and also like the removal of the 2% target line. So, I mean, out of the gate, that's going to be like one of the first questions. They're going to be like, dude, why did you take that out? Is 2% no longer your target? So he's going to get grilled about that. The SPY just pushed down, made an intraday low. The Qs have actually not. The Qs had a more adverse reaction from Trump's 1 p.m. commentary about curbing sales to China from NVIDIA. And we might be going for it now, but the SPY it actually did hit a fresh low. Here's a look at the options flow, slightly drifting down. For the Mag 7, it's flat. Flat, but dangerous, but still hasn't really been trending in any way. I would say that ever since about 2 p.m., the options flow is consistently going down on the S&P 500, while in that same time frame, it's not really just even moving much on the Mag 7. So we're about 12 minutes out from Jerome Powell's talk. At this point in time, yes, the initial reaction was a slight bearish reaction. But with that being said, please understand that this could easily be reversed. If you've been day trading any of these FOMC announcements or anything like that, we've seen situations where yes, the initial movement, whether bullish or bearish, is amplified by Powell's speech. And then we've seen other ones where he actually completely reverts it. So whether bullish, then it dumps bearish, or bearish, it rips up bullish. And then we've actually seen the other ones where it reacts one way, Trump gets it to go completely, or excuse me, Powell gets it to go completely the other way. And then by the end of the day, that whole move, the second move, is completely reverted with an entirely like crazy third move. So, this is just the start of it. I just want to remind everyone that you don't have to be like, I suppose, sold or guaranteed that this is bearish. So that's a roundabout way of me saying, be careful about chasing this to the downside. You might want to have the patience and wait to start to see how not only the price reacts, but also how options react to Powell and Powell's commentary and all of that stuff. This is by no means a guaranteed situation. My account is getting its ass handed to it at this moment, which is uniquely painful for me. But maybe Powell will come out and save me. I'm hoping he will. I have been swinging bullish positions for like 2 weeks now. My bullish positions did not relate to this announcement. Of course, I knew that this announcement was coming, and I was hoping that the announcement would benefit me. But it wasn't like I played 0 DTEs for today or anything like that. So I was hoping for some giant explosion to the upside. And granted, I will admit that probability is now dropping. Clearly it's dropping just because that initial reaction was bearish and the market doesn't really seem to be recovering much. But hey, there's still a probability it could happen. There is a non-zero chance that we could have a nice recovery out of this. So that's what I'm hopeful on. Obviously, that's my own bias. I know some of you in here right now probably have a huge bearish position and you're hoping that it absolutely vomits. And my hope to that is that you lock in your gains right now and you go long and then we all make money. So I would hope that happens. Trump is speaking. Where is he speaking?
Hawkish. Dow's at a session low. We also have NVIDIA, a big mover this afternoon on reports.
Does anyone have a link?
Curbs on its sales to China. The company now saying they're ready to work with them on AI.
$50 million being sent to Gaza to buy condoms for Hamas. 50 million. And you know what's happened to them?
Let's see if he
They've
says
used
anything.
them as a method of making bombs. How about that? We stopped an attempt to make an illicit payment for illegal alien resettlement. We canceled $181 million in DEI training contracts. This is just for the training of people in DEI, which has been terminated and completely terminated. And we paused $1.7 billion in unauthorized payments to foreign organizations, including stopping more than $40 million that was on its way out the door to
options are very much picking up now. We're not back where we were at 2, but they're trying to break out of this recent delta high.
We also
Mag 7 still flat.
We also blocked $45 million for diversity scholarships in Burma. 45, that's a lot of money for diversity scholarships in Burma.
Burma?
You can imagine where that money went. These were the
Options
types
are
of
still
payments
picking
and many
up.
others. I could stand here all day and tell you things that we've found, and we have to find them quickly because we want the money to flow to proper places. But these were the
We're seeing
payments
some
and types of
bullish
payments
aggression
affected
coming
by
in
the
now.
temporary freeze, and the American
Let's see if he
people
keeps
strongly
going.
support these efforts. I talked about it during the campaign, and they voted for us in record numbers. Every single day, we're now putting America first and fighting to get
Jerome
the most
Powell will
out
be
of
on in
every
about
single
5
tax
minutes.
dollar for
Right now,
our
Trump is
great
speaking, but I don't
citizens.
think
We've
he's spoken
gathered
about
this
the Fed
afternoon
decision.
to take another historic action. However, in a few moments, the Laken-Riley Act will become the very
Okay, yeah,
first
still
bill
not
that I
Fed
proudly
talk.
sign into law as the 47th President of the United States.
The Mag 7 is looking real lethargic, has not done anything.
Laken was a brilliant and beautiful 22-year-old nursing student from Georgia, the best in her class.
All right, seemingly not about this. All right, so here are the biggest tell that the Fed is worried about inflation. The removal of the statement inflation has made progress towards the committee's 2% objective from the December Fed meeting. A long interest rate pause has officially begun. Recent indicators suggest that economic activity has continued to expand at a solid pace. Last time around, they said, since earlier in this year, labor market conditions have generally eased, and what did it say? The unemployment rate has moved up but remains low. Inflation has made progress toward the committee's 2% objective. They got rid of that, and now it says the unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. So basically, they dropped the sentence from last time around to this one that it's making progress towards the committee's 2% objective. That's all you need to know. We are no longer, from the last meeting, from December until now, within that month, we have not made progress. That's why they cut it. In support of the goals, the committee has decided to maintain the target range of the federal fund rate. Okay, we knew that. And then they change out the people who are now the voting members. So that's it. The red cross out line and the new blue line, obviously that's the new one. That's the big difference. The big difference is from last time to this time, apparently we are not making progress toward the committee's 2% objective. Instead, unemployment has stabilized at a low level in recent months, and the labor market conditions remain solid. And inflation remains somewhat elevated. That's the change. So the market's initial bearish reaction, granted a kind of muted bearish reaction, if you will, was because of that. And even how that Twitter account was referring to it, most likely we're going to, I could even show you, but as long as it's updated, I could show you. It looks like the chance of us getting a rate cut is not going to happen until June. So we know we didn't get a rate cut there. No one should be surprised about it. And it looks like the first real chance of us getting a rate cut is going to now be in June. So obviously the fixed income market updating pretty quickly. You could check this out yourself on the cmegroup.com. It's the Fed Watch tool, but it looks like we're not getting a cut, folks. We're not getting a cut for at least half the year. So that's pretty much where we're at. Now, that's the current situation. Everything I said with relation to price and flow and all that might be changing very, very rapidly because Jerome Powell will be speaking in 4 minutes. If you're just joining in right now, I want to make this explicitly clear. This guy has the capability, this initial drop-off, he can make it 5 times worse. He could also have a giant recovery, and we could also see just an absolute whippy mess of a drop, a bounce, a drop. So you kind of have to be prepared for anything. As soon as you start trading some of these FOMC days, like more and more, you're going to start to realize like truly anything's possible here. I would say in the past handful of FOMC meetings, this initial 2 p.m. reaction is one of the most muted ones we've had in a bit, as in just not that much range, not that much volatility. I mean, heck, the NASDAQ tracked by the QQQ ETF is actually still above where the market reacted to Trump's 1 p.m. announcement about NVIDIA and curbing sales. So that in itself shows just the lack of reaction. And then the SPY's right at that low value, which also happens to be the high from 2 days ago, just shy of 600. We're at in the top right of your screen is the S&P 500 on the futures market. In the bottom right is the NASDAQ 100 on the futures market. I put on the 1 minute with the super trend indicator just to see what that 1 minute trend is. And then obviously I'm giving you the full day picture on the top left and bottom left of the SPY and the Qs, more on the 10 minute, just so you can see where we are relative to the lows, relative to the highs. But right now we are in that awkward pause period where we have about 2 minutes to go. And actually, speaking of which, let me get that up and ready to fire. Are they going yet? Let me reload this page very quickly. All right. Well, we don't need that at the moment. They're just playing awkward whatever music. Let me get this up there. Cool. All right. So this is the stream. Grabbed it off their website. Obviously, if you want to watch it, you could get it right off the FOMC website. But what we're going to be doing here is, obviously, I'll be giving you my thoughts and opinions on if he says anything crazy that we got to be paying attention to. But more so is let's track the options flow as he's talking to see if they're getting more aggressive and bullish and buying calls for the remainder of the day, if they're buying puts. I do want this to be well known. If I sound biased, I am biased. I have a lot of money on the bullish position, so I would love a recovery. I would absolutely love a recovery. Now, just because I want something to happen, is the market going to give it to me? Most likely not. Probably not. Things have not been looking good, but it's not completely out of the question. It's definitely not 100% out of the question, but my accounts are looking pretty rough. Pretty rough. So that's where we're at, folks. This is where we're at. I suppose before we get rocking, before we start listening to Powell like an absolute hawk, any thoughts or opinions on where you guys see this going? Do you think, if you had to vote right now, do you think we're just going to chop sideways? Do you think the bottom is going to fall out and we're going to plummet? Or do you think we're going to bounce off of this like double bottom situation and Powell's going to calm everyone down? Where are you thinking? Crater, bounce, or chop? Crater, bounce, or chop? Crater, bounce, or chop? Where do you think this? How much you are down? I'm down a lot, dude. Down, vomit. I'm voting, hoping NVIDIA falls, bounce. All right, we have a lot more negative Nancy's in here than I necessarily. I knew I shouldn't have asked. We got a lot of negative Nancy's in here right now. Not looking the best for me, I'll be honest. I think we are all kind of on a different side of the trade. I'm going against the community. We got some serious negative Nancy's. All right. Well, I have to admit, I hope I'm right and I hope you're wrong, but when this many people are agreeing on one side, it makes me feel like maybe I'm on the wrong side of this trade. The wrong side. All right. Man, that music is annoying. It's so incredibly annoying. Come on. Let's start it up. Let's get this video rocking. Let's get this video. Oop. We're looking. Okay, here we go. Nope. They're still playing annoying music. I'll probably get DMCA and I'll probably get in trouble for that. Is he coming out? We're all waiting. We're all waiting. All right, 1 minute quick reaction stuff, 10-minute intraday stuff, and obviously I'll just keep showing you the options flow throughout this to see if we can glean any information. As of right now, from 220 up until about 225, options had a nice pop, gave some of it back, and right now, overall, we are literally just sitting at the intraday low. I have an alert for a new low, and then I have alerts for recoveries, but obviously both are quite a bit closer to their low than anything else. So here we are, folks. Buckle up, Buttercup.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities
Options
holdings.
are picking up.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
Fuck.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%.
Options pumped, and now are giving it back.
We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored.
Mini pump completely given back at this point.
Goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have.
Options catching a little bit of a bounce here. Same with price.
And, really keeping our heads down and doing our work, and that's how we best serve the
public. Come on.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
No contact. All right. Okay. We can work with that, people. The Bulls can work with that.
Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since
the Bull camp can work with that.
How has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back
the Bulls can work with this.
So, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely
options
to
are trying to pick up.
So
is it enough?
Look at the
Mag 7 is also trying to pick up a little bit.
Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive. And for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned.
Come on, keep it going. Let's test 500
of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market.
This is VWAP right here, the volume weighted average price. Let's go.
The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say you look at the last couple of inflation readings and you see we don't overreact.
Send it, pal. Brother, send it for me.
The last couple of readings have suggested more positive readings. So
send it, brother.
Policy is well positioned.
Go, pal.
Colby from the New York Times.
Send it.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again,
everyone buckle up.
At the sort of intermeeting.
Come on, motherfucker.
And there was another inflation reading, I guess, just before the December meeting. So we've got two.
Pal, you know what to do. Say those words.
Inflation. Again,
let's go.
We're not going to overinterpret two good or two bad readings.
No, hold VWAP.
To send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2%
This is my break-even line. This is where I go from horrifically red to at least a little green.
Across a number of measures rise sharply, which has in part been linked to tariff concerns.
Fucking pump it, lady.
This encouraging data that you mentioned.
I'll marry you on the spot.
Rent indices.
There we go.
How would you characterize
there we go.
Upside risks to inflation across the committee, especially those
Come on, get us back into the green. Get us back into the green.
I'd say you see expectations moving up a little bit at the short end.
I'm almost seeing green, folks. I'm almost seeing green.
Could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy.
Come on.
We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy.
Get me back in the green. It was green for a second.
We'll patiently watch and understand, and kind of not
be in a
hurry to get to a place of understanding what our policy response should be until we see how it plays out.
I need to fully commit. Hang on.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are
Alex,
conditional
you
at a
and me,
minimum
buddy.
on just
It's you and me,
a set of
Tonto.
expectations.
We're suiting up now.
And are highly uncertain in both directions.
We're ready for
We
this,
know
man.
that economic
We're ready.
forecasting
Come on.
is really difficult.
Come on.
Beyond just a month or two out.
Come on, buddy.
In the current
I'm ready.
situation, there's probably some
Got the suit on and everything. I'm ready.
Uncertainty because of significant
Keep it.
policy
No, don't
shifts in
fail
those
at
four
VWAP.
areas
Bounce
that I
right off
mentioned.
of VWAP. Come on.
Tariffs, immigration,
Come on.
fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through.
Let's
that.
go,
And then we go
dude.
to the regular
Come on. I'm ready to see motherfuckers on the moon. We're going to Mars, brother.
But everybody's doing is they've got
Send us to fucking
sort of
Mars,
just a set of
pal.
assumptions about what might happen.
Come
but they're
on.
really kind of in the nature of a placeholder, and meaning plausible could be, but honestly, you wouldn't
No,
stand
wrong
behind it
way.
because you just don't
Wrong
know.
way,
And so
buddy.
you're just on hold waiting
We're
to see
supposed to be going
what
up.
comes down.
That's where the moon is.
It's a very large
The
economy.
moon's up,
and
dude.
Policies affected at the margin, but we'll
The moon's
we'll
up.
see.
If I can follow up, the idea that you feel the economy, that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract
Lame.
the best
Get this
talent
question
by
out of
investing
here.
in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent consistent
Come
with
on,
the recent
dude.
executive order
Come on,
prohibiting
dude.
diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Order submitted.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We
Follow
analyze
through.
how it
Where's
will
the
affect,
follow through?
the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. It'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it was, it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today,
options taking a bit of a breather.
More so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. It's
come on.
We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress.
Hold VWAP.
Being seemed to set up
bounce
forward
off of VWAP. Come on.
Another. So we're going to see further progress on inflation. Remember,
Options are picking up.
We're
That's
under
good.
2%, but
Options
our
are
goal is
picking
2%,
up.
and
That's
we do want to
good.
get back sustainably to 2%.
Keep going.
And in terms
Options
of the
flow is
labor market,
positive,
I mean,
long, and
how-
strong. Just break
is that
through and rip.
broadly, you know, you said a broad set of indicators show that
Come
it's
on.
in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, you know, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting?
Options are still strong.
The ratio
keep
of
going.
vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market.
Rip, man.
The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward. Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the
Options are
break-even
still
rate
pretty
that you need
strong.
in new jobs
Options in the Mag 7 are strong.
To make jobs for workers declines as well. So that seems to be something about what's
Q's
happening.
trying to go
You do
green
see
on the
a
day.
very
Q's,
flat,
the NASDAQ is
unemployment
trying to
rate at a
go
time
green
when
on the
you've seen
day.
significant declines.
12 cents
I wanna
away.
ask about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press.
Options are still strong. I don't know what's going on with price.
By reducing gas and energy costs, do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything.
Come on, just break out and rip.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles.
Be the rip.
Billions of dollars in damage.
Be the rip.
And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed.
Small dip in options there. Might be continuing.
And I think that the activities of the NGFS are not
bigger dip in options right now.
given our current mandate and authority. So, you know, and I just
calls being locked in, puts being purchased.
You know, this process dates back
pushing the delta down
a couple of years. I made the decision.
Mag 7 is
board,
holding strong.
you know,
Mag
some
7
months
is
ago.
holding strong.
The process just took time to get here, and this is when we got it and voted on it. So
profit taking and bearish bets being put in, especially on the zero
politics. It was driven
DTE.
by kind of the disconnect.
Come
between
on,
the
turn
work of the
around.
NGFS
I need it to
and
fucking
our
turn.
mandate. Other central banks have different mandates.
Turn, brother.
And belong to the NGFS. We have no
brother.
criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. You know, we're somewhat above that, as you know, and you know we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see. And
Mag 7 is holding.
Pick that up.
S&P 500 is still dipping since really
The other thing I wanted to ask
255.
was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the
Come on,
neutral
pick
rate by
back up
its works.
options.
So I think, you know, at 4.3%,
Pick up. Where's that bullishness?
Pretty much everyone on the committees.
Here's a look directly at
estimates
the
of a longer
Qs,
run
just
neutral.
QQQ.
I think
profit
our eyes
taking.
are telling us that our
More
policy
profit
is having
taking
the
at
effects on the
250.
economy. That's really the question we ask. You know, you can consult models.
Back up to break
empirical
even.
models,
Come on.
theoretical
I
models.
need this to
You really have
hold.
to just look out
Let's
the window
go.
and see
Make this the run.
how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has
Pump it,
bring
pal.
the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I am.
Just here. Let's go to the
I have
80.
no
Let's
illusion
pump up to
that-
80.
That anyone knows precisely how much that is. But you know, not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions.
She
if I
sounds
may, on
fancy.
tariffs. Well, first of all, we've
Come on,
seen
Claire,
global trade
honey.
wars before.
Bump it.
Notably in 2019, last time around.
Damn,
but
dude.
Then we were
Who's
in a
getting
very
out of these
different place on
options?
both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, you know, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there were differences.
Dude, every
And
time I
just
think we're about to get going.
range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long.
Some people are
or how much,
monetizing
what
calls.
countries.
That's the
We
issue
don't know
here.
about retaliation.
They're not buying
We don't
puts.
know
They're
how it's going to
monetizing
transmit
calls.
through
So it's
the
these paper-handed
economy
bitches
to consumers.
that are knocking it
That really
down.
does remain to be seen.
What
there are
pussies,
lots of places
dude.
where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then
As soon as these little fucking
how it goes.
baby call owners stop selling, we have a shot.
Thank you.
They don't
Courtney
deserve
Brown,
these profits
from
anyway.
Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant.
These call
as always, we stand ready to
people
take
are selling
appropriate
their
action
calls.
to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments.
Come on, stop
on
selling
AI,
calls,
it's
you
a big
bitches.
event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon Rabinovich with The Economist. Thank you. You mentioned
Too
in
much
your remarks that
profit-taking
activity in
going
the
on right
housing
now.
sector seems
We're
to have
losing steam.
stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So,
Why are they dipping on these calls?
They're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So
come on, bounce it back.
We
just need some call buyers to step fucking back in these
through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer
Look
rates
at all
have
that
moved
call
up.
selling. And some put buying recently. Just dropping the delta.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that.
Mag 7 is holding
we
strong,
never said
though.
we need to be all the way at
Come
target
on, Mag 7.
to reduce
Bring us to the
rates.
promised
At any
land.
time, what we're doing is
Pop
we're
that
looking at the
delta.
economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so
We're right at
we need to see
VWAP.
further progress. I wouldn't say all the way back. to
Average
2%
person
on a
is
sustainable
break even
basis,
right now.
Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States, cause you to ponder your growth forecast.
You know, I want to avoid commenting even indirectly on the conduct of tariffs. You know, it's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, you know, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent,
back above
can
20.
start
Come
to
on,
matter
dude.
for businesses making
back
investment
above 20.
decisions and things like that. That's not something I'm observing today. It's very early days.
Come
for us,
on.
but that
Come
did,
on.
I think that did matter in 2018-19, and it's one, you know, one of many things we'll be watching.
Matt.
Just get
Thank you, Chair.
Hold
Powell.
20,
From CNN.
break 50,
Following up
break
on Courtney's
75,
question earlier about the
fill my
stock
target.
market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at from a financial stability
It's
perspective.
really
at
struggling
asset
at this
prices generally,
VWAP level.
along with
Really
things
struggling.
like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated
Options
by-
flow
by
has
many
not been
metrics
good
right
since
now.
255.
A good part of that, of course, is this thing around tech and AI.
But the Mag 7
we
is
look at
looking
that.
good.
But you know, we also
S&P
look at how
500
resilient the,
down. Maybe we
households
bottomed here
and
at 305.
businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. You know, we look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that, you know, that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment has stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were
Come
to
on,
start to
options
reduce
picking back up.
headcount, you would see
Let's see that
unemployment
follow
drop
through.
quickly
Get the
because
nice
the hiring
follow
rate is
through.
quite low. So that's one
Seeing a
thing to
nice
look at.
upward trend.
I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, you know, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level,
on.
and you've been solidly there now for 6-7 months.
45,
And job
75,
creation is pretty close to a
95.
level
That's
that
what we're going to
will
do.
Hold the
Pop,
unemployment rate there.
pop, pop.
Given that, you know, there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
You know, we hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing.
Little
about
higher
construction,
low.
for example.
Let's bounce off of it.
You know,
It's
businesses
3:10. We
that
have 50
are,
minutes left. We have
dependent
plenty of
on,
time. We
immigrant
have
labor
plenty of time.
Are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick. Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your
Hold the
career
breakout.
or
No.
as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
Does it want to break
I guess I'd
out
say this,
or not?
Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few
Options are
months of the
still
pandemic.
decently
That
strong,
was
trending up.
uncertainty. Are we going to be able
Mag
to
7
reopen
is
the economy?
definitely trending up.
If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good
He says
labor
right
market.
when the
We have
market
the
takes a
economy
hit.
growing at 2 to 2.5%. Inflation's come down.
Apple's green.
The headline inflation
Tesla's
number was
getting hit.
2.6, and that's what the public experiences. We look at core because
Meta's
it's a better
green.
indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table?
No.
And then additionally, are
What a
you looking
stupid
to
fucking
see
question.
better than expected data on inflation to cut, or are you looking for inflation data that roughly aligns with current forecasts?
Why would that fuckface ask
as
this
I
question?
mentioned, the economy's strong, the labor market's solid. Downside
Thanks,
risks
dickhead.
of the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path.
I swear.
Tells me,
The task
and
of
the
question,
other
you should
members
have
of
to pass the
committee, broad
IQ
sense of
test,
the
dude.
committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question
Market
was,
Business International. Where the fuck is this guy working from? Who's
Whether
this
or not
clown?
You need to see better than expected inflation data, or just
Shut the
inflation
fuck
data
up,
that
dude.
roughly aligns with your
Shut
current
up.
forecasts?
it's one of those things, we'll know it when we see it, but more
What a
the
fucking
expectation
moron.
is that we will make continued progress. And, that's what we want. We'll know it when we see it.
What an
it's gonna have to be
absolute
something that isn't just
moron.
idiosyncratic. You're going to
What
want to
a
see
dumb
continued
motherfucker.
progress with housing services.
March.
inflation.
Are we going to cut
You're
in
gonna wanna see
March?
inflation
No.
behaving in a way
Open
that
your
builds
fucking eyes,
confidence that we
dipshit.
are really making progress.
What
That's
an
what it's gonna be.
absolute
And,
idiot.
I mean, is that better than our expectations?
Absolute
If we expect to see that, it's
fucking
just a question of
Nimrod.
when.
Here I was thinking you had to have a certain IQ to ask
Chair
these
Powell, Scott
questions.
Horsley from NPR. In your 5-year review, you
Unbelievable.
said the 2% inflation target won't be on the
Unfucking-believable
table.
that they let that clown
Can you
in
talk a
that
little
room.
about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime
Okay,
soon.
good.
And 5
Take away
years
some
ago,
uncertainty.
If I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market
10
is
minutes
so
been pretty
beneficial.
stalled out.
Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of
Options
inflation.
market trying
So
to
the
pick
thought
back
was that
up?
We'd seen really low levels of inflation, of unemployment, with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was.
How's your heart rate doing right now?
At
That's a
times
stupid
when
fucking question.
Inflation persistently undershot 2%. We would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else.
We're definitely starting to see some weakness here.
Irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Dude, I need a miracle turnaround. Fuck.
Hello, Chairman Powell.
It
Mark
all
Hamrick with
ended.
Bankrate. As you know, in the annual
Right
report
when that
from the
dickhead
Financial
asked
Stability
about the March
Oversight
rate cuts.
Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households,
Flow
perhaps
is starting to be
distinct from the
lost as
concern
well.
about the financial system, do you worry
3 minutes
that
in a row
speculation in
of
this
just going down, with
unregulated
the delta
asset class
dropping.
could hurt their financial
Pick it back
well-being,
up,
or do you
dude.
think it has a place
Pick it back up.
in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers.
Options
who
flow
are
bouncing a
perfectly
little bit
legal
over the past
just
minute.
because of excess
Mag
risk
7
aversion,
also
maybe
bouncing a
related
little
to,
bit.
Regulation and supervision.
Price
So-
really not doing the most.
With respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with
Come
members
on,
of
let's
Congress
break this
working together with
downtrend.
them on
For
various
the past
things, and I
30
think that would
minutes,
be a
we've
very
had lower
constructive thing
highs
for
and lower
Congress
lows.
to
Let's
do.
switch this trend up.
Thank you.
He's done. He's done. Get him off the stage. No more dumb fucking questions. From Market International, whatever the fuck made up bullshit that was. All right, folks. Come on. Come on. We're back to VWAP. volume weighted average price. It is this white dashed line that you see on my chart. It's just, if you're above it, the average person is thought to be in profit. If you're below it, the average person is thought to be at a loss, because most people just buy, they're not really selling. Obviously, it'd be inverted if you are short. I'm watching a little bit of this trend line right now. It seems like a pretty silly trend line, so I'm removing it from the chart. Obviously, I needed to return to this recent high that we saw around 3 p.m. just to be break even. The reason, I see some people saying, why didn't I get out at break even? And that's a really good question. In all reality, if it were my own personal trading account, I 100% would have. But when you're trading these SIMDA funded accounts, you have to worry about ratios of like your drawdown versus your profit. So for me to be able to do another payout request, I actually have to get a certain profit. So I do want to add a bit of clarification. I'm not so degenerate to have this amazing of a recovery to not get out at break even. If I were trading my own full account, I 100% would have had it right at 59.50. I'd be like, cool, survived the day, and I would have moved on with my life. But when you do SIMDA funded, they do have various rules like consistency rules, but the one rule I'm particularly thinking about is the 5-to-1 risk to reward. So for me to not have broken that rule for the 5x risk I took, I need to look at what the proper reward is. And I did some very quick back of the napkin math, and I roughly needed to go up to 95. So I do want to add a bit of clarification. I'm not here trying to be like overly greedy and saying I need money. No, I'm literally trying to not break their trading rules. Like that's what I'm attempting to do right now. Thanks for being the best boss ever. You're always a winner in my book. Shout out, Chaos. That's very nice. Maybe it's those kind words that are going to get this to finally pop up. Come on. Almost back to break even. But like I said, a break even situation for me, I would be more than happy in my own account, but I am considering these other rules. So basically, I like the recapture of 45. I needed to take out 75. And then from there, it should be somewhat smooth sailing up to 95 for me. Just to comment on my current live position, I am long 3 contracts on 20 different accounts, which means I am long 60 NQ contracts at this moment in time. At one point today, I was down 10,000 per account. I have 20 accounts, so I was down $200,000. Right now I'm back to break even, so that's pretty sick. So at least I've had a 200K recovery if I were to close right here. But obviously with the amount of contracts I'm carrying and how volatile this is, little movements can be quite a bit of money. So even though those numbers were true, I mean, who knows what they're going to be like 2 minutes from now. So let's see what this is. Once again, I just got tagged for break even. If I am forced to take a break-even trade, I believe the worst punishment is that I will get denied on my next payout, and then I'll have to trade for a whole nother cycle to be able to do another payout. I believe that is the worst case scenario, but because I'm not 100% sure, I'm still going to try to play this, but I also can't play to the point of being so pig-headed that like I somehow hurt myself. So this is what I'm doing, but I think this is an important teaching moment. In pretty much any other situation, like I would have just been getting out at break even and I would have been counting my lucky stars. I'm forced effectively by their rules right now to be pushing it for a little bit more than I want to be. But it looks like I might be getting lucky. Obviously from starting at 210 until now, lower highs, lower lows, just here at 320. We got a potential trend line breakout. The options flow is picking up on both the Mag 7 and on the S&P 500. So price action and options flow are currently favoring me. And I find in my life of trading that I get quote unquote luckier when I trade with price action with options. Right now, price action and options are both pointing to the upside. So I'm hoping that quote unquote I'll get lucky with it. But in reality, it's not luck. It's just stacking the odds on your favor. Your odds increase if you trade with, once again, price trend right here. High, like this breakout, and then overall we're getting some higher highs and higher lows. Is it double topping here? There is a big issue at 60.50. That's quite an important, I could show it to you. I'm expecting a reaction here, so it might get smacked, but I could show you. Shout out to Gexbot. I am on the right thing. Okay. See this giant gamma resistance? That's exactly where we're at. And in fact, it there's resistance all the way up to 55. Now, if we break 55, there's a chance that we run very quickly up to 70. So that might lead for like a really exciting final half hour. But the reason we're struggling right here is because there's just so much gamma at this level. That's exactly why we're struggling. Oh, fuck, we're close. Come on, dude. Come on. The years that I took off my life for this blood pressure, let's go. Let's go. Your boy was down 200K. Can he pull off a $250,000 swing? Can he pull off a $250,000 swing? Can he do it, ladies and gentlemen? Will the market gods smile upon him? Come on, fucker. Come on. Come on. Was down 200K. Now I'm slightly above that. Can I lock in a 40K profit? Can he do it? Come on. Come on. Come on. Give it to me. Give it to me. Give it to me. A little, dude, we're so close. We're flirting. We're flirting. Dude, we're right there. Come on, pump it. Pump it.
Order filled.
Fucking did it. $250,000 swing right in front of your faces. You, dude, best to ever do it. Best to ever do it. Warren Buffett, Bill Ackman, Ray Dalio wish they had the diamond ball sack that's on this boy. Look at that. Over. How much? Actually, what's the total? The total on that, just a nice 43,000. Fucking locking it in. Just a little casual gain right there, brother. Little casual fucking gain for your boy. Dude, shout out to all the fucking naysayers in here. Shout out to all the naysayers. Get out. You don't know what you're doing. You're not going to make money. You're going to blow out. Dude, am I? Am I? Hope you weren't holding your breath on that one there, buddy. Because that's pretty fucking embarrassing if you were. Dude. Your boy lives to fight another day. Your boy lives to fight another fucking day. I just, here we go. Here we freaking go. You're welcome. Yeah, you guys are welcome for letting you witness absolute greatness.
Wall Street, 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 Wall Street. Now my stock rising, got the eyes on me. Wall Street.
I don't know what else to say. I think I've proven the point that I've come in here to prove. Fired up Phil, not gay at all. Hey Phil. If making a $250,000 swing to profit $40,000 in a day is gay, I'm going to suck dick all day, brother. Dude, we have a weird little homophobe in here, unwilling to make money. Unwilling to make money. It's gay to make money. Hey, Phil, enjoy being straight and poor. Straight and poor Phil. Fired up Phil. I think your real name should be always poor Phil. You fucking loser. You fucking loser, Phil. What an absolute bitch. Dude, Phil, how pissed are you? How pissed are you, Phil, that I so easily make money? It's literally not gay, I said. Folks, like I said, it's easier to joke around now when you make so much money. It's not as fun when you're down money, but all the ha-has and hee-hees. All the ha-has and hee-hees when you're up the money. Up the money. All right, let me clean this up a little bit, and maybe we should talk about real things. real things. All right, where are we at? The SPY, I did mark out the intraday high from 10. There's a shot we get there. It's about $1 away. And actually the Qs are even closer to their intraday high. So it's actually, the Qs are trying to fight green. They're actually at that red-green move right now. And the SPY is about $1.40 away. Totally possible. I mean, we have about 30 minutes left. So we've seen crazier things in the last half hour of the day. Let's throw up some equities. DJT is holding a nice gain of 7.6%. It actually happens to be the largest gainer on my watch list. NVIDIA got a little bit of a bounce here, but man, oh man, did it get pretty much destroyed all day. A lot of negative delta flow against that. Meta popping. Is this a new all-time high? Almost. Meta's almost at a new all-time high. Palantir, nice recovery there. Broadcom trying to turn it around. Tesla, don't forget, reports after earnings close, or after the market closes today, has its earnings. Microsoft, strong bounce, honestly, since 950. It was a wild ride, but it's a decent recovery. Apple in the green. Apple's been long and strong today. Apple is a good reason why we didn't get so demolished. Really, it is. It undid a lot of the negative movement of early morning on Microsoft and pretty much all day on NVIDIA. So hats off to Apple. ASML had really good earnings, gave it back, but still up on the day, 4.6%. Qualcomm not doing much. Rumble not really moving too much. Coin, big explosion at the end of the day, probably related to some of that crypto commentary, but really at 2:30, Coin started to go. MSTR a little bit. Netflix grinding up, not too much of a story. Amazon not doing anything. Google, nice intraday grind to the upside. XRP trading at 312. Solana. So crypto getting a pump at 230 for sure. I mean, even Trump coin getting back up to almost 30. Texas Roadhouse looking strong at 182. Gold's doing its thing. So that's where we're at. That's where we're at, team. It looks like the Qs are trying to make a new intraday high at the last second. You guys want to see a disgusting portfolio? A look at the old portfolio. A quick disgusting look at this. Look at so market opens, my account gets destroyed. The low of the day is at 225, down $15,500 unrealized. And now we're making a recovery, only down 1.7 by the end of the day and might actually be pushing green. What a recovery. Literally down 15 fat ones. 15 fatties, as my boys and I call them. And now we're literally making a rush to maybe potentially go net green by the end of the day. Who does this stuff? Dude, I'm telling you, man, Warren Buffett takes my private classes on how to get such a diamond nutsack. It really does. You get a question, will he have to pay taxes on the 43K? I'll have to pay taxes on my net gains at the end of the year. You don't do it per trade or anything like that. It's the calendar year. And you look, if you're net up, you pay capital gains on that. And then if you're net down, I think you could write off to $3,000 per year, but obviously you should talk to a real tax professional. But you don't pay like per trade or anything like that. It's the net situation at the end of a calendar year. That's how the taxable years are set up, at least here in the U.S. It might be different where you are, but at least in the U.S., that is the current situation we have to deal with. Meta's making a nice push into the end of the day. The big thing today, here, I'll show you this. Let me show you this real quick, dude. Right here. After the market closes, Tesla, Meta, Microsoft. Tesla, Meta, Microsoft. Those are the ones that are going to be high flying after the market closes. High flying. Meta, right here. Tesla, Meta, and Microsoft. The top three right under Bitcoin. Let me cover it up just so it's a bit easier to see. These bottom three, Tesla, Meta, Microsoft. If you're trading them, you might want to be paying attention. They're all actually getting a pretty decent push into close. I mean, golly, it looks like Meta's almost at the all-time high. It is. The all-time high is 682.58. And it's about $2 away from that. So that's not a bad deal. Tesla, daily chart, not looking the best. Microsoft, daily chart's actually looking like a pretty nice recovery. I'm curious if the earnings are going to push it above 448. That would be a nice technical breakout. Let me see how long. Okay, we do have some time. I don't have to necessarily rush this. Okay, earnings. So the expected move for Tesla is 8%. The expected move for Meta is 6%, and the expected move for Microsoft is 3.75. So once again, Tesla 8%, Meta just over 6, Microsoft just below 4. So 8, 6, and 4 is what you could think for Tesla, Meta, Microsoft. So to put that another way, 8% move would potentially bring us up to 424-ish, or maybe as low as 360. That's for Tesla. For Meta, the expected move is 6%. So 6% could bring us all the way up to 720. It could also bring us all the way down to what is that? About 640. And then for Microsoft, it's about a 4% move is the expectation for the earnings reaction, which, Jeez, hang on. Whoa there, Tonto. That would bring us up to in the realm of 462 or potentially as low as around 425-ish. So those are probably the major setups I assume the majority of you are paying attention to after the market closes today. Tesla, Meta, Microsoft, 8% expected move, just over 6 and just below 4, but also IBM and Lam. Just so you know, before the market opens tomorrow, UPS, MasterCard, and Southwest, Caterpillar, Comcast, and then after the market closes tomorrow, you have Apple, Intel, Visa. But I should also remind you that early tomorrow morning before the market opens tomorrow, we're going to get the ECB, the European Central Bank interest rate decision that comes out at 8:15 in the morning. And then at 8:30, we're going to get the final reading of the Q4 GDP for the US. So that's all before the market opens. And then just because we're here, you should know that on Friday, an hour before the market opens, we're going to be getting another inflation report. So just wanted to throw those all out to you. The major things to be prepping up for before the market officially concludes on the day. So with that being said, I'm going to have to let you guys go right now because what I need to do is prep up for a post-market video. So as soon as the market closes, obviously we're going to be hearing from Tesla, Meta, Microsoft, and we have to recap some of the craziness from the Fed today. So I'm going to get ready for that. That video will be coming out later on today. So pay attention for that. Make sure you have your notifications and subscribe and all that good jazz on both Rumble and YouTube. So right now it looks like the SPY and the Qs are giving a little bit back. The Qs try to go green, getting smacked. The SPY just try to hold 603, got smacked. But right now there's, I assume, some nerves heading into the earnings calls right after market closes. So around 405, 415, that's when the reports are going to come out. And then from there, we're going to probably around 5:30 p.m. is actually have the legitimate earning calls, once again, all in East Coast time. So prep up for that. I do want to let you know that the overall options flow was bullish up until, 3:30. And now you most likely just have some call buyers monetizing. And then if you look at the Mag 7, pretty crappy day, but a solid pickup from 215 up until about 3:30-ish. So a little bit of profit taking right here for these, probably some nervous Nellies heading into whatever this weekend's going to be. So just wanted to share all of that with you. Don't forget, you can join up with the Goonie Trading Discord if you so choose. The first month is free. Just make sure to use that code Goonie when you're signing up. Pinned to the top of chat in the description of the video. Sign up for locals, become a supporter for free with the code Goonie. And then once you're in there, on the right side in the second pinned message, that's where you're going to find the information to join the actual Discord. But first, you have to be a supporter on locals. I appreciate all the good vibes. I appreciate all the laughs, the ha-has, the hee-hees. But overall, I'm so happy that you guys were able to keep my mental state on the tracks today without really going off tilt for too bad. So I do directly want to just say thank you to you guys for helping me not completely lose my mind on the day. That's what I have for you. We'll be posting content later on today, streaming once again tomorrow morning. I hope to see you there. Good luck, Buttercup.